Good evening, everybody. It is Monday, June 14th, 2010, and this is a stock market discussion. And I'm going to go over go over a few markets, go over mainly the same positions: Pan American Silver, silver, gold, and we're going to talk about the U.S. dollar. First, I'm going to look at the silver chart, and going to look at the daily. This is the commodity contract, and what I'm going to focus on is a couple things. First, we put in a higher high here. See this tail here? So it's a little higher than the other previous highs, and so we have a pattern of higher highs and higher lows. We're above the 18-day, which is this blue line. We're still below the 45. Close at 1825. 45 is at 1829. If you'll notice here, these pink lines are converging, and the pink lines are the Bollinger Bands. And basically, when they tighten like this, it basically means that a big break is imminent. As far as which direction it breaks, it's still not known yet. I mean, you could take your own guesses. We do have, looking at the MACD now, which is down here. This is the MACD for those of you that don't know, and we didn't have a cross, so it's still slightly below. The black line is slightly below the red, but you have the histogram is ticking up, and you have a positive divergence on the histogram, as you see here. The stochastic down here is 68 and 66. It's not quite overbought yet. It looked like it curled here because of some of the pullbacks. So it's pulled back, but it's still pointing up, and basically there should be resolution to this market in the next few trading sessions. As you see here, Bollinger Bands tighten, you get a big move down, and then you could get a big move up. So you could have a head fake in one direction and then go in the other direction. I don't think that's going to happen. I still think this market's going to break to the upside. And a big part is in my previous videos, last video I did, I talked about how the dollar was going to weaken when it was near its highs, and that has broken down. And I do not think that silver is going to drop with a weak dollar. Okay, so that's said. Next, I'm going to pull up the USD chart just to show the breakdown of the dollar. And last week I warned of the negative divergences that were building up in the dollar, but at the time the stochastic was embedded, which means when you have three sessions where the black and the red line both close above 80, the stochastic becomes embedded, and the trend becomes stronger. But that is not the case now. Now you have some serious negative technicals here. Number one, as you can see, we broke the 18-day here. Dollar had a close of 86.63. This last high, as you can see, like I was pointing out before, the MACD put in a lower high, so this is a negative divergence, and we broke down from that. So the negative divergence has been confirmed. You have the histogram is still pointing down. You had a big jump to the downside today, and basically what your target would be is the next moving average or the Bollinger Band. In this case, it is the Bollinger Band, and it looks like it's in the it's at 85.31 right now, so that would be your short-term target. However, I am anticipating that this market is going to break down and probably retest the 82, 83 area, and then possibly head lower at that point. As you see here, the stochastic, this was above 80 for a few days, and because of the downward pressure, we did break, and now you have the black line is 48 and the red line is 61, so you're still not oversold, and the momentum is pointing to the downside. So basically the dollar should be under pressure for the next few sessions at least. And I think that there's a pretty clear trend reversal in the dollar. Okay, the next chart you want to look at is, or that I would like to look at. Hold on a second here. I'll log back on. I'd like to look at the gold chart. Gold has been in a better position than silver, just because it's been above all its moving averages, and gold is in an interesting situation here too. It could break either way, but I do believe it will break to the upside. As you see here, the 18 days 12/13/27. What was the low today? 12/16/70. So we went back down. We kind of we somewhat tested that area again. We held and we closed at 12/21/50. So we're above the 18-day moving average. You have the MACD on the new high. It crossed here to the upside, but it was looks like just made a new high and it pulled back. So the MACD pulled back. The histogram is still negative. You have negative momentum, and you have the stochastic turn down, and it's kind of resolving the overbought condition, but it still has a 59 and a 66 reading, so it's not exactly oversold. So the gold market could be under pressure in the next session or so. But if it manages to stick above, hello, hey.